Welcome back, ladies and gentlemen, to round three of this intense earnings period. My God, it has been a crazy day, whether the markets are rebounding or you're looking at Teladoc today, just getting absolutely slaughtered. I'm hoping the volatility isn't getting to your brain and you guys are able to just ease through this, grab yourself a beverage, pretend like nothing's happening, and come back in a year or two. Because, God, this is probably one of the most volatile earnings seasons I've ever seen. For the first time ever, it's like mega cap growth is trading like penny stocks, because for Apple to move 5% on a day, we're talking about like $100 billion moving in and out. So hedge fund, those hedgies out there are really shuffling cash around. But then you go to the smaller caps, and it's like there's no volume at all. The ARK Innovation ETFs are all down. All the small caps are barely moving today, and you think that's where most of the volatility would be. But let's recap real briefly here, folks. So we got Facebook yesterday that, like, honestly, it was fairly lackluster, but we're talking about a massive conglomerate here, right? So we're still talking about tens of billions of dollars in revenue, but they literally came on the lowest and missed their own guidance. And yet, just because we're seeing still growth within the user numbers on their platform, and the fact that, I don't know what the earnings expectations were, but clearly they beat the earnings expectations. So the stock, again, being highly oversold, just beaten into the ground, can't go much lower. People are like, it's a discount, it's a deal. We're trading at PEs getting close to the lower end teens here. I mean, what do we hit a low of, like 12 or 13 at the low end there? So at least we're getting a little bit of life here. And considering we saw QCOM yesterday, all the earnings have been really good. Like I said, pretty much mixed bag, a little bit of good, a little bit of bad across the spectrum here. And let's just take a look at the sticks and see what's going on here. So coming into close, guys, we're about 10 minutes out. I do have all the earnings pages pulled up. Going to keep refreshing like I did yesterday until the freaking numbers come up so we can analyze them live together. But yeah, man, Apple's holding up 4.52%, definitely recovering from the lows that it dropped. So it's like we just kind of reverted back to where we were a week ago. Amazon's holding up, so good expectations, probably driven from the fact that, Visa's numbers, when those Visa numbers came out, it definitely offered a lot of solace to spending in the market, at least, because that should drive well for consumer discretionary, whether you're buying iPhones or shopping on Amazon. So we'll see if that bodes well for that. Amazon or Microsoft's back up today, another 2%, almost back over 290. Google's, again, regaining all those losses from yesterday. So I figure Google, Facebook, probably still good buying opportunities at these lows. Actually, it's just, I don't know. You should just always be buying stocks. Kev G's got the idea here. I mean, this guy's all about them index funds. Just buy it every day. Every day you can buy it, just buy it. Because these are the kind of markets where you don't want to get caught up in price action, because the price action is what will devastate you here. But I took the luxury of doing some purchasing this morning. So I did end up buying quite a bit of some stocks today, but I'll talk more about that tomorrow. It just feels like, we're starting to finally get into a place where the market's going to have some more certainty in what's going on moving forward. And again, I should pull some of the stats up on the inflation stuff here too, because I'm sure, I'm hearing about it still every day. But when we take a look, let me pull up some commodity charts here. Because last time I looked at commodities, they were falling off a cliff. So look at this. So let me pull this up and we can skim through some of this together while we wait here as well, folks, because this is where all the expectation for inflation comes in. And it's so easy to analyze outside of like what the, you see on that one sheet the Fed posts. So while we wait for Apple and Amazon's earnings over the next 10 minutes here, I think this will be fun because most people probably don't analyze this as much. But for inflation to continue peaking and going up as high as it has, it requires fuel prices and all this stuff to continue going up. But look at this period that we had here, right? Like, I mean, when we went into the geopolitical event, fuel being a primary factor for the rate of inflation, it's kind of leveled off. I mean, it's really started to flatline and find this range, right? But if we scroll through like a huge spectrum of these, like copper's a huge one, it's down massively. The precious metal market's been pulling back. Wheat, another really scary one we want to analyze because this is highly dictated to food prices globally, and that is flatlined since this rapid run up we saw within the last couple months here, right? So I can't expect inflation on the next earnings report to be, crazy to any extreme, because every commodity is finding a baseline finally. And the fact that the stock market now has some really great certainty coming into play here, and we know what the numbers are, we know what companies are doing and how they're handling the worst of the worst geopolitical and inflationary pressures. I don't know how it doesn't get better from here, to be honest, unless there's some crazy black swan event. Like, I mean, even look at lumber prices here. I mean, they've really nominalized back to a reasonable rate. So, So once we get that Fed report where this all bakes in, inflation's going to nominalize, boom. I just can't see how we're not going back into at least a nominal market or, back to a bull market. Because this is all just uncertainty here, man. It's all just uncertainty based. $128 to fill up a gas tank today for a car. Yeah, I know, man. You must be driving a much bigger, nicer car than I am, because my car, in the midst of the bottom of oil prices, it was like $30 to fill the tank. And now I think I'm sitting at like, I don't know, 60, 70 to fill the tank. I drive a beater. People going broke. Yeah, I don't, God, you never know, man. You never know. Savings rates are up according to JP Morgan. So I don't think people are going broke, but then you look at Visa and spending's up. I saw Meet Kevin briefly talk about like, it was an interesting little anecdote that, spending, the way Visa operates and just the amount of people that use, like, I guess debt is like the middle class. And when you look at the fact that, Visa's transaction level was up massively, a lot of that could be driven. I don't know. You don't know. Nobody knows. It's all speculation, but it could mean that the rich people are getting richer and they're not really spending any more, any less, but the middle class is spending way more. I don't know. Who the hell knows? When JP Morgan says one thing and Visa says another, spending's up, yet savings are up. I mean, it all bodes for a good market, in my opinion. I think Amazon has good earnings. I'd like to think that they're going to be great. I'm actually more speculative on Amazon, because what I think is going to happen is what we saw with Google and Microsoft is they both reported record growth when it came to their cloud services like Azure or Google Cloud. And Amazon, I think that's where they're going to see their best growth if these last couple earnings had any correlation to it. And if there is a slowdown, when it comes to just like UPS saying that they're seeing a slowdown in e-commerce, same thing with like YouTube slowing down, right? Like I feel like every earnings right now has mixed of good and bad. Like for Microsoft, the only bad I could find was that Xbox sales have drastically slowed down since the pandemic, but that also makes sense why they're looking to purchase, like I was saying yesterday, to purchase Activision Blizzard. So I think just like everything else, Apple's the one that I'm really pivotal on, because, I'm very excited to see, because that'll dictate either way what the market's going to do, because that thing moves 10% in any direction and it moves the entire index. So it should be intriguing to say the least. But like if you go on their website, you'll see that maybe I'll pull this up real quick, because I thought this was funny about Apple. Because a lot of people have been talking about it, and this could be a good and a bad sign for Apple. But let me just pull up a product here, because the problem is how long it takes you to get these items, right? Because that's what a lot of people are talking about. Because if we go in and I'm just going to make a random buy order here, because I just want to see what the delivery date is. So I'm just going to pick a random laptop. Let's just see when we can get this by. Okay, so the laptops are still good now. So 5 to 7 weeks. So yeah, it's about a month out to get a delivery on an M1 MacBook. And this is what a lot of people were talking about is maybe I'll pull this up for you guys so you can see this as well here. Yeah, so when it comes to the supply constraints, either Apple has so much demand they can't keep up with it right now, and that's why we're seeing like extended wait times, or it's because of what was going on in China, some of the the logistics problems that were going on. So if we take a look at, like, here's just a 14-inch MacBook Pro, space gray M1. This has been out for a while now, but if you want to order one, man, it's 5 to 7 weeks. I mean, you're waiting close to up to 2 months. So you can see that down here. I hope you guys can see that. My head's not, no, so it's good. You guys can see that there. Yeah. So right at the bottom left by my face there, you'll see the wait times. So I remember when I ordered this when it came out, and I think it delivered way faster than 5 to 7 weeks, because I literally ordered this the day it dropped, or the 16-inch MacBook Pro M1. So I don't know what that means for the stock, that, maybe they're not being able to meet the demand. Maybe demand's so high that they're struggling to keep. Who the heck knows? This could be a good and a bad sign. But we will find out. We will surely find out here. So we are about 5 minutes out to the earnings here. I hope it's the 5 minutes. Apple or Microsoft and Google posted instantly, but yesterday it took Facebook a little while to catch up to their pages. There's like 1 million people like me refreshing it like crazy. So we're heading in. We're seeing Apple still holding flat around 4.25% up for the day. Amazon sitting at 4.43%. Facebook needs to get back up to 220. I think it'd be a little happier at fair value around that price. Still good buying opportunity here, though. I think at these prices, nice to see PayPal finally coming back as well, right? Like PayPal had great revenue or transaction numbers, like record transaction numbers, but their EPS missed. So it's like one of these things, right, where, this is going to be short-lived. Anything that happens after this week is going to fully bake in whether, the stock is trash or it's going to be good. I think after this week as well, I can't imagine seeing these kind of small caps continue to get crushed the way they are, because Kathy Wood's boat is on fire. Like, she literally threw a torch on it and just pushed it off into the lake. I feel bad. Actually, let's take a look at the ARK Innovation ETF real quick while we're sitting here waiting. Scroll down. I to keep them on here. The ARK Genomic ETF is what got crushed the most. It's nice to see. Like I said, look at these small caps. Like Coinbase is flat today. ARK is down 1%. ARK-G is down 3.58%. Obviously driven by Teladoc just getting crushed, man. Just absolutely crushed. What else we got on here? So Virgin Galactic 2%, Hyliion 1.3%, Ouster 2.5%, Rocket Labs 2%. Chronos, the Canopy, you know, they're seeing a little bit more volume. But yeah, anything that's like highly speculative, like even if we scroll all the way down here, I mean, look at GameStop today. It's got no volume and is barely down at all. It just makes no sense. Like to see this kind of price action, it's like nobody cares about small caps anymore. If it has a hint of risk to it, people don't want anything to do with it. And as soon as they're confident their mega cap companies aren't dying, you know, we're going to just go back to the moon and then hopefully everything nominalizes. But who the heck knows, man? I just buy used MacBooks. Yeah, for the first time in my life, I bought my MacBook and my iPhone cost more than my car do combined, which is kind of hilarious to think about. For the first time ever, I bought a new MacBook. First time I ever bought an Apple computer at all, because like you, I usually just buy Windows custom computers, way cheaper. But honestly, best investment I ever made. This MacBook is a powerhouse and a half. It never crashes, no issues, you know, for the conversion and just having direct transfer from my phone through the AirDrop, all that stuff, man. I love Apple products. I'm thinking about buying an iWatch as a gift to myself at some point, but you know, I have a hard time bringing myself to just load $500 on personal items. I'm always more about $500 into this stock. You know, S&P 500's down. QQQ, let's go. You know, they're expensive items, though. Don't get me wrong. For me to spend 10 or 4, what did I spend on this laptop? A lot. It was definitely a lot. You'll never go back to a PC. I know that's the problem, and I have a Windows PC, so I have my old laptop, which is Windows, and then I have the MacBook here, and I kind of play off both of them all the time. But it's really weird, man, because on the last upgrade, Microsoft literally replicated Apple's layout. Like they put all the you know the widgets or the apps and all the Windows things at the bottom, and they just leveled it off. It's the same. It looks exactly like Apple now. Their whole interface, the whole layout of it. I thought it was so funny when they did that. I think Microsoft inherently is better for gaming because I can't even download Fortnite on Apple anymore, right? So inherently, I think when you're gaming, PC is the way to go. But if you're editing, doing anything with AI, machine learning, you know, all that stuff is just voted so much better for Apple. It's like they fixated on the film industry and just made their computers like just these wicked powerhouses and really compact. But honestly, the MacBook's the best laptop I've ever put my hands on so far. I love it. Love it, love it, love it. But outside of that, I don't order anything on Amazon. I rarely use Prime. I'm also really intrigued to see how Apple and Amazon's Prime and, you know, Apple TV are doing in the midst of the Netflix disaster. Because if they're doing very well, it really shows they're stealing a lot of traction from Netflix. So I love Apple TV, man. Apple, they got the money to burn. It's half as much as a Netflix subscription. And honestly, a lot of their series are just stellar. They did so well with a lot of things. Many of you know that were in our group. I was really into Severance. That was awesome. The morning show is really good. So it'll be neat to see how they pull this off. My girlfriend was really into the one that Steve Jobs, Tim Cook liked a lot. What was that one? I can't remember off the top of my head. I should. She's going to hate me because I don't remember what it was. I never watched it. But I like the Party Access Android has. Yeah, you know, I'm an Apple person. You know, Party Access. Every time I see one of those green texts come up on my phone, I'm like, ugh. Can't see if they've read it. But anyways, folks, we're 1 minute out. 1 minute out, the markets are flatlining. So clearly, I think a lot of the anticipation's been baked in. I do agree Apple is much more user-friendly and sleek. I also think that Apple does a better job at avoiding viruses because my parents use Windows and they click things and it redirects their browser. So it looks like their computer's locked and they have to pay someone to fix it. And all you have to do is like Control-Alt-Delete and close it from the task manager to like reset the freaking Chrome browser. That never happens on Apple. I've never, like, when it comes to the whole like older person, I think, you know, people that need more, like they have less experience with computers, Apple has just made it so a child could pick it up and figure it out. So I feel like from that standpoint as well, that, you know, they are more user-friendly. But anyways, folks, 1 minute, let's go. Get your drinks ready here, folks. Well, cheers up to the last earnings of the week that really matter, in my opinion, though. We got Canadian earnings coming out, and that's going to be a big proponent. I don't know if anyone's going to care for me to live stream that, but this is the big one, man. This is the big one. Any closer to finding a place to live? I found out where I want to live. That'll be coming up soon as well. I don't know if I should start just doing I have another channel. Maybe I should just do some like daily vlogs of, my life changing here, because I've definitely become more conservative, knowing that, my expenses are drastically going to increase. Not that I'm too concerned about it, but I love having that safety net of them dividend stocks. So anyways, let me pull up the sticks. We can watch them real quick. We don't want to miss this. So we'll see what Apple does here. It looks like it's bouncing up higher into close, but I highly doubt I can see the sheet yet. So I'm refreshing the page like we did yesterday. And do we have it yet? No, I'm still seeing the Q1 from last month. So, the last quarter. So I just see the listen to the conference call. What about Amazon? Amazon, show me something. Show me something. So we still don't have the results, but I guarantee the stocks will be bouncing like wildfire here. So somebody's going to be getting the results. It looks like did Amazon just give up all of its gains there for the day? What was it? Does Amazon drop? And am I missing something here? What's going on here? So where were we at? We were at 2,900 and now we're at 2,800. What happened there? And oh God, Amazon. Oh no, Amazon. No. What? Did e-commerce come in that bad? Oh God, I am refreshing the page here, folks. We're looking for it. Oh no, quarterly results. Give me the quarterly results. Oh God, no, I'm only still seeing from last quarter. Come on, give me the numbers. Give me the numbers. Oh God, no, Amazon is falling apart here. Apple's still doing okay. It's holding flat. We're up 5%. Who's getting these numbers? How is this happening? It's just like some big hedgie out there is like, oh God, you don't give us a 5-minute heads up here, folks. We need to make the first decision. Because we're talking about hundreds of billions of dollars, man, for these companies to do these mood swings. Some freaking hedge fund out there. Because if me and you don't have the numbers yet, who the heck is trading off what they know? Oh man, so annoying. If you guys can refresh the pages, if you guys can find the link, send it in the comment section there, because I'm still seeing nothing on Amazon. I'm gonna refresh Apple again. Still seeing nothing on Apple. Nothing out of the unusual here. Come on, man. Give me some numbers. Give me some numbers. I'm so bored watching these numbers float around. It's like this big anticipation to watching you lose all of this money while Amazon's now down to 2,500 a share. Oh my God. It hurts. It hurts. What are the numbers? What are the numbers? Oh God, this is brutal. What am I drinking? For YouTube purposes, this is just apple cider, it's just apple cider. I had a drink on the first one. I'm having a drink on the last one. Oh God, this is one where we're probably going to need the drink. Amazon's at 2,600 now. Oh man, I'm not getting hammered. No, I don't drink that much. I'm not the biggest fan of alcohol. It really screws my brain up. Usually, I don't know what it is, man. I'm a lightweight. I can have a few drinks, feels great while I'm doing it. But then, the next day, I wouldn't even call it a hangover. It's like brain fog is just insane. It's like you can't make the right decisions. But, one drink here and there is not so bad. So we're at, let's see here, guys. I'm going to refresh the page again. I'm kind of getting disappointed. I hate when this happens. Like, come on, man. Like, this is bullshit. Can we see it in the SEC filings? No, I just see the proxy. I don't see anything yet. God, this is annoying. Let's go back to Apple real quick. Let me refresh Apple's here. Come on, Apple. Give me something. No, still just seeing the conference call and the last quarterly reports. Can somebody do me a favor and go dig around and see where the heck these numbers are posted? You're getting old. I'm getting very old, bro. Going to my 30s here. My 7 years of crazy performance stock market investing is coming to an end of diversity and safety and security. I do not want to lose money. That's my new rule of thumb. I can't lose any money. I don't own Amazon. So I'm not losing money on that one, at least. I am getting hammered on a lot of my recent buys though, but it was nice to see some rallying today. JP Morgan, I thought I bought it on a good dip. It dropped 10% from where I bought it. Amazon refreshes Twitter. Yeah, I feel like someone on Twitter is already posting the numbers. Let me scroll down on stock twits here. The stock guys are going nuts here. I mean, clearly. Bye. What a quarter. Let's see a 47% drop. Holy crap. Jesus, whales bought the calls. Yeah, I don't know what's going on here, man. This would probably be a really good buying opportunity. Just when you think it's over, right? Like just when you think it's over, It's not over. Amazon must be bad, down 10% after hours. See, here's the thing. It's never as bad as you think it is. That's what I've noticed with these earnings. Like I said, it's always a mixed bag. And analysts, I don't know how, I feel like analysts are controlling the bots. Like there's a bunch of like, just AI that buy and sell every day. And they completely dictate off what they do from what analysts post on these research forums and shit. Because like, Facebook's numbers literally came in on the lower end of guidance, like the lowest end, just missing it. And the stock just flies. So it's just like, none of these stocks are trading off fundamentals here. It's purely speculation, gambling, and probably bots. Because again, we're talking about hundreds of billions of dollars. I don't know that many people sitting here trading after hours. So, are we talking about how does it come up with hundreds of billions? Like how does, Amazon just get clobbered here without people doing like, massive trading to some extent? Anyways, there we go. Amazon announces first quarterly results. I think we have it here, folks. Let me refresh Facebook's page or Apple's page real quick to see if we have anything out of Apple, because I'd like to see Apple first, but nope. Ain't seen anything out of Apple, but it does look like we do have the report here. So I'm going to pull it up. We're going to read through this real quick. It looks like oh my God, this is a lengthy release. So yeah, we got some scrolling to do, folks. I don't want to spoil it. So we'll look at this together. Let me close out of the stock twits here. And get ready. We know there's going to be some mixed bag reports in here. So let's pull it up. All right, Amazon. Here we go. Is this the right page? Yeah. So here we go. First quarter, folks. Operating cash flow decreased 41%. Let me zoom in so you guys can read this with me here. To 39.3 billion. Why is it freezing? Come on, scroll over. Oh, God, what is happening here? Let me fix this here, folks. I need to read the whole report. Operating cash flow decreased 41% to 39.3 billion for the trailing 12-month end compared to the 67 billion for the trailing 12-month end March 31st, 2021. That is not good. Operating cash flow here. Free cash flow decreased and to an outflow of 18.6 billion for the trailing 12-month. I guess the inflows of 24 or 26.4 billion. Free cash flow, less principal repayment, free cash flow. So I guess people are paying attention to the operating cash flow. Let's just take a look at the chart because I hate reading these. They make it a little too confusing when we can just scroll down. Here we go. Let's just take a look. This is where we want to see. So net income for 2022 went from a net income loss of 8.1 billion for the year prior to 3.8. I'm hoping these are billions of dollars here. Am I reading this correctly? Are these in the thousands, in the millions? Holy geez. So millions, billions. Yeah. So I guess 3.8 billion. So 12-month end, 21 billion for this quarter versus 20, or for the year, or the 12-month end. Sorry. Let me get my shit together here, folks. For the 12-month end of 2022, we were looking at $21.4 billion versus 26 billion for the time prior. So that is a pretty drastic decrease. I wish they would just say it simply, like revenue, net income. So that is a net income loss, by the way. So they're still bleeding out capital. So net product sales went from 57 billion to 56 billion. Net service sales went from 51 billion to 59. So obviously the services sector for them is what's growing. And I imagine we're going to get into something that has to do with obviously Prime, the cloud aspect of their business. I figured, like I said, it'd be a mixed bag of perhaps missing on shipments and physical products and more focused toward cloud. Cost of sales did go up pretty drastically here from 62 billion to 66 billion. Fulfillment went up drastically. Technology and content went up drastically. Sales and marketing went up drastically. So yeah, it looks like they're spending a shoot ton of money here. So operating income, again, went from that 8 billion to 3.6 billion. Diluted EPS, this is where it hurts a lot. This is probably why the stock's tanking. This net number that everyone looks at. Diluted earnings went from 15.7, so $15.79 to $7.56. So yeah, obviously, guys, largely inflicted by the slowdown in e-commerce, which was relatively expected, right? So dark mode makes you read faster. Yeah, I don't know. Maybe if we just do this, boom. Well, yeah, I don't know why it's like dimming the top of the page here either. Anyways, so that's Amazon, guys. They definitely missed by a mile on their EPS. They have a lot of expenditures. Spending is wrapped up. So you're gonna have to listen to the earnings call. I don't own Amazon. I always find their numbers to be confusing as all heck. They trade at high premiums. So I want to see Apple. Man. Where the heck is my Apple numbers? There we go. No, we don't. We can't go yet. I'm still not seeing it on their page. Apple, man. I need to see the Apple numbers. What's it doing on the sticks? What is Apple doing on the sticks? Let's take a quick look here. Share screen. So Amazon, where are we at now? Amazon's down 5%. Apple's starting to pull back. It's down to 3.77% green for the day. So I'm curious to if anybody has the Apple numbers. Come on, give me the numbers. Give me the numbers. Key updates. Apple's earnings Q2 2022. Thanks. Where are they? Are they coming out at 4:30? Are they coming out at 5? They usually come out at market close. That's what I'm saying, bro. That's what this meme is like exactly how I feel right now. Look at that. This guy knows what's going on. Come on, man. Give us the numbers already. You are next today was the opportunity to bail. Oh man, is Apple going to crash? Is it going to tank? Oh God, nobody knows. You know what's funny is so many people were using Amazon as like their savings account. Like I watch Dumb Money. They're all heavily into Amazon. Amazon's just one of those stocks I've never been able to wrap my mind around fully. And I've always been so hesitant on it because it's such a complicated business at scale. Whereas like Shopify, I'm expecting to post good numbers if, Google and Facebook, if they have anything to say about it, even though the e-commerce sales are down for Amazon, that doesn't mean that like the sticky business that is Shopify's, subscription as a service business model. I don't know how they're going to do like bad. It could be wrong, but who knows? Robinhood completely missed, lol. Robinhood post as well. Should we pull up the old Robinhood stock just to see what's going on with that? I'm still refreshing the stupid Apple page. Come on, Apple. What is going on here? We got stuff. I want to go out. I got stuff I've got to do today. This isn't like the top of my list of things to do today. So what's going on with the hood? Let's pull it up. Let's take a look at the hood here while we wait. Come on. Show me the hood stock. Why is StockTwits like, there we go, Robinhood. Pull it up, pull it up. Let's take a look here. So Robinhood is trading down 7.93% in aftermarket. Oh God, yeah. So the hood's getting destroyed as well. I knew it. I imagine right now there's like a lot less investor hype than there was now that Dogecoin, GME, AMC have cooled off. The speculative markets died down. That was like, Robinhood represents the retail investor. It's too slow. It took months. Like, look at the volume here. Like nobody's even messaging on the volume for StockTwits. How many watchers does this have? 53,000 followers. And it doesn't look like no one really cares. It looks like the hype for hood is dying. So let's go back to Apple. Apple, man, 808,000 people following this on StockTwits, and the forums are lit. Patience. I don't have patience. So it was a miss. We don't know if it was a miss. Like I said, man, we know Amazon was a miss, but we do not know what's going on with Apple here. Let me see. Keep refreshing the page here, folks. When is their live supposed to be at 5? Yeah, so 5 p.m. is the live. So they have to post it between now and 4:30, I would imagine, because they don't post it right when they go live. Usually they let people digest it for a little bit and then they go and discuss it after. So anyways, how are you guys feeling about this? What do you guys think about the Amazon drop here? How many of you guys are holding Amazon shares? How many of you guys playing the Apple game here? I'd love to hear about it. While we sit here in a depressive manner trying to figure out why the heck Apple is taking forever to give us numbers. People, earnings are at 4:30 in 18 minutes. Oh my God, so many amateurs in here. Yeah, call me an amateur. Maybe it is 4:30. Maybe we got to wait another 15 minutes and we can hang out and talk about some other stuff. But it's not like they tell you this stuff, It just says the scheduled for Thursday, April 28th, 2022. The earnings call is at 5 p.m. There's nowhere in here where it's like, hey guys, we're going to release. Maybe it does. Maybe there's a press release that I'm missing where it's like, we're going to post at 4:30 so everyone can feel bad about Amazon. Yeah, so we're hanging out, folks. We're having another beverage. We are buying stocks today, though. I hope you guys were taking advantage of some of these dips. I don't know what my stocks are going to look like after today based on what Apple and Amazon do, but I can tell you, man, I think I spent about close to $40,000 this morning. I spent a lot of money today. I don't ever want to have to do it again. That's my goal. I was like, after this, I'm done. I am not playing this, earnings game here. So I just dumped all my money in where I thought it was relevant, and we'll see what it does. Because I feel like, things aren't as bad as people are making them out to be. They're not bad. Things are looking, we're going to see some blue skies here, baby. I hold Amazon. One bad quarter. Who cares? That company is a mammoth that will only keep growing. 100% agree. Like I said, this is like one of those things where if you're truly a long-term investor, you just set it, forget it. A guy in our chat group today was like, when do I buy? How do you manage this stuff or whatever? And it's just like, man, you don't even think about what the price action is. You just buy it. If you like it, you buy it, and you just consistently figure out a plan to cost average into it over a year, 2 years, 5 years, whatever your plan is. What did you buy? I will tell you what I bought tomorrow. I don't want to talk about it today. I could talk about it. It's not like it's a big deal. It's really conservative. I've taken an extremely conservative approach to my portfolio, and I reweighted my entire spreadsheet. So when I show you guys my portfolio, it'll be from top weighted to the tiniest position I have, because I think it'll give a clear image on what really is moving my portfolio. But to put it in perspective, RioCan right now is my largest stock position, and it's not by choice. It's just because the stock rallied so aggressively from the March 2020 dip when we were buying it. And yeah, I just can't bring myself to sell it because RioCan makes me a small fortune. This company makes me like $1,000 in annual dividends. Got it at like an average buy price of $16 or $17 a share. And this is like, I've felt this real estate. I know everything about what they're working on. I just love it. I just love RioCan, so it'll always remain probably my largest position until something else takes over it. My second largest position, by the way, is TELUS. We were just talking about this today. TELUS stock, I absolutely love. I wish the data would come up. I don't know. StockTwits is just lagging out on me here. TELUS is what Teladoc wish it could be, because TELUS, one of Canada's largest telecom companies, has excessive exposure to telehealth. It's like one of the largest telehealth companies in Canada, and they crush. I mean, they never miss numbers. They're such a phenomenal Canadian company. It's really weird how I've gone from like large weight, U.S. stocks to large weight Canadian stocks. But yeah, I had some dividends come in as well that I reinvested today. A lot of Canadian dividends. But anyways, Apple's still holding flat. So we'll wait till 4:30. I'll still refresh the page just in case they're wrong. Either way, back to back. We had Amazon. We'll quickly review Apple, and then we'll get to see what happens here. But yeah, nothing going on with Apple. Let me just refresh. Nothing going on there. Do you drip RioCan? No, I do not drip any stock right now. I wish if I was smarter, what I might do is set up a drip on my banks, because my Canadian banks and the bank sector in general has just been getting wrecked. So when it comes to the banks, I might set up a drip because BNS is trading down quite a bit. TD, Royal Bank have all pulled back from their highs. And the only reason that I say BNS specifically is because most people don't know that specific companies, and there's very few of them, they actually have drips set up where you get a discounted dividend reinvestment plan. So I think Bank of Nova Scotia gives you a 3% discount if you reinvest the dividends. So basically every dividend reinvested, you immediately get a 3% return on those shares, depending on the volatility of the day. Northland Power is the only other company I know that does that. I don't know of any US large caps that do discounted dividend reinvestment plans. So, but yeah, I don't know. Maybe I'll set up a drip. Maybe I won't. Just depends on how I feel. I've been on and off dividend reinvestments because it's just such a large amount of money, right? Like I'm getting over $1,000 a month. So it's like every time I get it, sometimes some stocks I like are trading down. Sometimes maybe I want to put it into the index funds or something like that. So I kind of like having that fun end of the month where I can just have a bit of extra money to invest. I'm buying BNS CMTD right now. Yeah, there's probably a good buying opportunity there. I've held those banks before anyone cared. I mean, I was holding those banks for years and they didn't do anything. And then they fell off a cliff and everyone's like, why would you buy banks? They don't do anything. They've been flat for years. And then all of a sudden they just skyrocket to all-time highs. And then it's just like, I sold a bit of Apple back then to actually buy the Canadian banks when they were at record lows, locking in like 6 to 8% dividend yields. What a wild time, man. I missed the March 2020 crash. It's just an unreal time. Google search says Q2 is at 5 p.m. Eastern. That is the earnings call, but not the earnings release. They always release the earnings release or the earnings document before the call. Always. So somebody said 4:30, which I would probably believe. They'll probably save it for 4:30 and then come on at 5. Either that or they're just trying to shroud from guidance, just trying to shroud that mystery of what's going to happen here. You got to remember, Apple's the only company or one of the only companies that didn't offer guidance. They didn't offer any guidance. So anything you're hearing from analysts, it's all bullshit based off their own opinions. It's nice when somebody like Facebook says, hey guys, we're going to come in. It's going to be lowered guidance. We're expecting the low end to be around 8% rev growth. And guess what? They come in at 7% rev growth. And the market, they baked in all that pain. They got it to max pain. And even with lackluster earnings, Facebook was able to jump. That's what scares the crap out of me. It's like, I want to know. I just want to know. It's like, if you think things are going to slow down, tell me you think they're going to slow down. And then the entire market will realize the value or speculate on the value, and we'll start, playing the game. But when you have no idea what goes on, you're talking about massive mood swings the day of earnings, right? That's what happened with Google. That didn't offer any guidance. Amazon offered low end guidance, and it looks, I don't know, did they come in at their low end guidance? They offered a 3% guidance, and it looks like they're already rebounding. So, that guidance really helps, I think. You like any infrastructure plays in Canada? One of my largest holdings is Algonquin Power Utility Corp. Hydro One's been performing very well. You also have, I hold Northland Power. I've got Southern Company for a U.S. kind of infrastructure energy play. I also got Enbridge. Enbridge is a good one. That's more of, that's kind of infrastructure, more pipeline based. They're boring, man. You don't buy those to look at them for gains. You buy them for dividends. I love that part of my portfolio because nobody ever talks about utilities at all. I rarely talk about utilities, but when it comes to performance, you don't tend to lose a whole lot of money in those plays. Anyone who considers INTC a good play doesn't get semi the industry. Yeah, that one was doing pretty good today, wasn't it? INTC up, or am I wrong about that? INTC stock. Let's take a look. It looks like it's down after hours, so maybe they just posted earnings as well because they're down 4% after hours. Never mind. I think I'm getting this confused with something else. Is this a semiconductor play, or is this? It's Intel Corporation. Duh. Intel. Let's pull Intel up real quick. I guess they posted today too. Intel. Give me the numbers. Why is stock twitch so freaking laggy? There. INTC. Let's pull it up. Yeah, so this one's down 4.33% after hours after being up 4% almost on the day, or 3.58%. It'd be neat to see the numbers. I've never really played Intel. I've always avoided the semiconductors and chip makers because I just don't understand them. And because Apple and Tesla both make chips and they're kind of vertically integrating their businesses, I'd rather just have them take advantage of that for me, because NVIDIA is an incredible company and I like NVIDIA a lot. I've just never been able to wrap my head around that business model. I just don't get it. And usually, like, to give you a bit of insight on how kind of weird the chip market is, chip manufacturers usually have only made enough chips to meet the market supply year over year, and that way they can control the pricing of the products instead of like oversupplying chips on the market, which they could have easily done post the March 2020 crash. And then what happened after the March 2020 crash was they weren't prepared for a situation where logistics and problems and all that nightmare would come into play. So they horribly undersupplied the market because they've never been used to oversupplying the market. These are all businesses that have had years to build up, manufacturing to a level where they could oversupply, but companies will not do that. Companies do not want to oversupply the markets, and that's one of the things the chip makers have done for years. So they got just, devastated to some degree, I guess, when things slowed down. They couldn't make chips fast enough. They weren't getting parts. They didn't realize there could be supply constraints. So I just don't understand the industry. It's very complicated. And I mean, geez, the recalls on chips sometimes, if they screw up or radiation gets in them, and you only need radiation from like the sun to get in it to screw the entire chip. I mean, when they make chips for planes, that they actually have to box them in like, I don't know what they put around them, but they basically made them so radiation can't get in them and screw with the ones and zeros, because planes have actually crashed just because one little, radioactive freaking, what I'm getting into some stuff that I shouldn't be talking about, but I've watched enough videos to know that it only takes just one little bit of radiation, like one particle, to get in and just screw up an entire chip. If you watch how they make chips at NVIDIA's factories, everyone's wearing suits. It looks like a chemical lab, and there can't be any, foreign substances floating around in the air, none of that crap. They have to sterilize water. It's a very complicated thing. It goes well beyond my pay grade, to say the least. So Apple is now up 4 points, or it's pulling back up. So do we have the Apple numbers yet? We're 5 minutes out to 4:30. I'm tired of waiting. I just want to see. So we're still waiting, guys. I'm sorry. We have to wait. You have a fab and an assembly test. Yeah. Amazon missed by $1.18. Yeah, Amazon definitely missed. Comparing TXN and QCOM, saying they are in the same industry is insane. Yeah. No, nothing about chip makers either. Bought AMD under 11 and thought I was a genius when I sold it for 15. That must have been what time frame was that? What's AMD at it today? Yeah, because I've always worked like one of my first jobs I ever had as a teenager is I worked at a computer store. Yeah, and AMD looks like it's down quite a little bit here, but now it's at $84 a share. So you're definitely aging me here, because the last time AMD was under $11 was quite some time ago, literally quite some time ago. I mean, what was the last time it was $11? Like back in before 2018, basically 2018 timeframe. But yeah, so yeah, man, I don't know. Any hope for MindMed in that sector? Yeah, a lot of hope. I was just doing an interview with Wasana Health Holdings. I work with that guy pretty regularly. Ex pro hockey player for the Blackhawks. I won 2 Stanley Cups, and he's running a crazy big psychedelic company. That's just one of those sectors as biotech is getting destroyed. So I wouldn't be looking at biotech day to day. That's something that you buy and set it and forget it for 5 or 10 years, because it's purely based off results and buyouts. Thoughts on what housing market looks like this year leading into next? Housing market's cooling off to some extent. Homes are still selling at decent prices, but depending on the area of the market right now, I've noticed where I live anyways, outside of Toronto, housing's cooled off a lot. Homes have been sitting on the market for long periods of time, at least 2 weeks plus, whereas they used to be selling overnight. And yeah, it's I don't know what to say about it other than I feel like a lot of people are sitting on their hands while interest rates work themselves out, because the bank interest rate is where I've been most intrigued by, because I've watched the basic savings account go from 0.2% to now 0.13%. Which is huge, right? Like now you can, this is a conversation I think we had a little bit yesterday when we're talking about the intriguing idea that bond rates and savings rates get high enough that it becomes a more intriguing investment than buying stocks. Because, you know, if you went back to the 1980s, the early 2000s or the 90s, I mean, the bond rates were insane, right? Like you could have locked in 10 to 20% yields on bonds like that, like easily. Like that's when savings accounts could make you 5 to 10%, you know, just based off the interest. So it was crazy, right? So why would you buy stocks if you're expected to get an 8 to 10% return when you could put your money into a bond or a savings rate where there's no volatility and there's a so-called guaranteed return, right? Because it's their government-backed loans, I guess. So I mean, it's just intriguing to think what happens if bonds got somewhere between 3 to 6%, or the savings rate in a bank account got up to 3 to 5%. Would that incline people to more likely save their money in cash and bonds rather than buy securities and you know, equities? Mortgage companies starting to do layoffs. Yeah. I mean, we've seen a boom, right? I mean, I kept saying that. I think that the real estate market in Canada, Toronto specifically, is a bubble. Whether it deflates rapidly or slowly is anyone's guess, but it's definitely purely based off speculation. And that's not something I appreciate when I'm looking to buy a house. You know, to me, it was always about cash flow, right? It really sucks because I grew up listening to people tell me about cap rates, trying to make 4 to 6% after your mortgages, your taxes, your expenses. And that's what your cash flow will be after you're paying the mortgage. So you get paid to pay off your house, basically. But when you come to Canada, Toronto, anywhere around Toronto, you're never going to make money renting, ever. You're never going to make a return. You're never going to pay off a material amount of the mortgage renting. Because if you buy a house, it's likely that your mortgage with a minimum down payment is going to be $3,000 to $5,000 a month on an $800,000 property. And you're only going to be able to rent it out for maybe $3,000 a month at most, if you're lucky, $2,000 to $3,000 at most. Which would just cover the mortgage. That we're not even getting into HOA fees if it's a condo, or, you know, just fixing up crap around the house, or property taxes, which, by the way, property taxes have gone through the roof because of house valuations as well, right? Like the Canadian government gave leeway. They're no longer making you like renew your stupid sticker on your car or whatever it is every year because they feel bad for Canadians and inflation. But meanwhile, they're collecting on property taxes like it's the best growth they've ever seen. That's what happens, right? Every year your house gets reassessed, and whatever that value is dictates what you pay in property tax. So it's kind of annoying that way too. But hey, if you're paying more in property tax, at least your equity is worth a lot, right? So what is Apple doing? Apple is sitting at 3.382% to the upside still. Nothing going on here, man. Amazon's starting to rebound, so people picking it up off the low. So clearly people are digging around on that earnings report and realizing it might not be that bad. But yeah, folks, so what are we buying here? I feel so bored having to wait to look at numbers that aren't coming up. 1 minute. We got 1 minute left. All right, 1 minute here, folks. Let's refresh the Apple page. Still nothing on here. So let's hope it's 4:30 and we can get this out of our systems and we can go back to a normal market, or whatever that means. But yeah, folks, are any of you guys actually buying homes right now? I'd love to hear anybody that's involved in the real estate market. That would be intriguing. I'd love to know how you guys are managing that. Because I constantly debate on whether we should buy or not, but I think I'm just going to wait a year at most. Buying CM POW is an interesting one. That's a fun one. I suggest people look at that. POW owns Wealth Simple. I think they have like they do global management. I think they have over. Don't quote me on this, but I'm pretty sure it's around $1 trillion in management for people's retirement accounts. I think they're involved in insurance stuff. They're a massive financial conglomerate on the Canadian markets that pays a 5% dividend yield. Again, don't expect a lot of growth. They kind of remind me of Manulife, where cyclically maybe once out of a decade they go up a lot and then they flatline for like a few years. Their dividend is fire. Yeah, it definitely is fire. I've debated on scaling down some of my banks to buy into that one just to continue diversifying my financial sector, but I can't really bring myself to do it. Because I just maybe I'll add it in sometime in the future. It's more of a retirement stock, to be honest. I think POW is a great stock for people looking for stable cash flow. Hey, Kyle, what's your preference on TSX S&P ETF? To be honest, I keep telling myself I'm going to buy one of those. For those of you that don't know the TSX S&P, you could go look at something like VCE. That's probably one of the Canadian counterparted S&P. Like it's the 60 largest companies in Canada because the Canadian economy is much smaller than the US. I think it's the easiest route to go, but honestly, I literally hold all of the top weightings. So I've just never been able to bring myself to buy it because I'm like Royal Bank, BNS, Toronto Dominion Bank, Enbridge, Shopify. Those are all the top holdings in that ETF. Canadian National Railway, something that Buffett holds. It's if you don't own a shit ton of stocks already in the Canadian market, it's probably the easiest path to go. XIU is another one. VEE is another one. But yeah, you should own it. I always think that global diversification matters, and the U.S. market severely underweight the Canadian markets, where I think we have better growth potential based off our population and specific foundational infrastructure companies like TELUS, like the banks, the utilities are constantly dealing with the housing explosion, the population explosion. So here we go, guys. Look at Apple. I guess that Apple numbers dropped. We're at 430. Apple's trading up 7.71%. We're going to refresh the page and we're going to pull the numbers up, presuming that they're going to hit the calendar here and I'm going to be able to see them, which I'm still not slightly quite. Is this the numbers that I'm looking for here? Q1, Q4, Q3, Q2. Do we got are these the numbers? Let me make sure I'm pulling up the right numbers here, folks. Let me refresh the page one more time. I'm still not seeing the press release for it, but it's definitely probably a good press release by the looks of it. I think this is it here. I just don't want to be wrong. Why is it? What is this one? Sorry here, folks. We're looking. Oh, no. Okay, no, that's 2021. Still not seeing it on their website, but just like Amazon, it gets dropped and can never see it right away. Oh, nope. Here we go. I think we got it. Apple reports second quarter. We got it. Let's go. All right. We got numbers here. No balance sheet stuff. We've just got a little bit of an anecdote. We are very pleased to announce, blah, blah, blah. I want to show you guys this press release, but I'm really looking for the balance sheet. So it's definitely here, I think. Come on, man. I just want to see the oh, do we get the update? Here we go. Finally, folks. No, that's not the right one. Oh my God. Could blow my brains out, metaphorically, unalive myself. This is so frustrating. I'll read you the press release because the quarterly results, they gave a little anecdote here. All right. This is the anecdote. This isn't what I want to see because it's not the numbers. I like just seeing the pure cut, clean balance sheet. It's so much easier for me to read. I hate reading these stupid things. This quarter, record results are testament to Apple's relentless focus on innovation and our ability to create the best products and services in the world, said Tim Cook. So what are we getting here? As well as the progress we're making to become carbon neutral across the supply chain and our products by 2030, blah, 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 blah. Apple's board of directors declared a dividend of 0.23 cents per share, which is an increase of 5%. Expected. And here's the consolidated financial sheet. So let's pull this up. There we go. Sorry, I was used to seeing it in the actual form, but let me pull up the condensed financial report here. So clearly the numbers are good. So let me bring this up. Let's just take a look here because Apple's now trading up 6.69%. And the numbers, guys, the products. Here we go. Net sales. Are we seeing the sheet? Am I sharing this correctly? I want you guys to see this nice and clear. Let's take a look. So products, let's take a look here. For the 3-month end, went from 72 billion to 77 billion. Services went from 16.9 billion to 19.8 billion. Total net sales from 89 billion to 97 billion. For the 6-month end, from 201 billion to 221 billion. My God. Apple continues to exceed expectations here, folks. Basic earnings on the diluted EPS, just to be sure I'm looking the right direction here. So yeah, so the EPS went from $1.40 to $1.52. That's pretty great. Let's take a look at how it breaks down globally. So it looks like America is still seeing the most growth, from 34 billion to 40 billion. Europe is seeing a little bit of growth. Greater China is seeing a little bit more growth. Japan, nominal growth, actually declining in Japan growth. And the rest of Asia Pacific also declining. So it looks like all of Apple's real growth in numbers is coming from Americas. Taking a look at the net sales from iPhones, guys. iPhones continue to go up. Man. The iPhone has not maxed capacity in the global markets yet. The Mac went from 9.1 billion to 10 billion. iPads went from 7.8 to 7.6. So it looks like we're seeing a decline in iPads for the quarter. Wearables increased dramatically from 7.8 to 8.8 billion. And services, which obviously would be everything from Apple TV to the cloud and all that stuff, 16.9 billion to 19.8 billion. So there's one thing we can see across all of these earnings periods, is that most of the revenue is coming from services when we're talking about growth. I mean, these growth numbers on a percentage basis is insane. To go from 16.9 to 19.8, this could be a Fortune 500 company in and of itself. Each one of these businesses in and of itself could be a massive Fortune 500 company. I mean, they could sever off the iPhone, the MacBooks, the iPads, the wearables, and it's all its own business at this point. So congrats to Apple, saving the market. So Apple, luckily, isn't going to ruin our lives, guys. Guidance sounds like shit. I'll have to take a look at the guidance and see what they're projecting moving forward, if they're actually offering guidance, which was something they didn't on this first quarter. But this is good, man. Even if guidance slows down a little bit, unless you're talking about Amazon. 5% app. Yeah, I don't think the dividend's that appealing anymore. I don't think anyone's buying Apple for the dividends. Their dividends increases aren't enough to satisfy me anyways. I'd rather stick to something like a McDonald's or a Home Depot. I think that's where you get your real dividend growth from. But let's just take a look at the sticks one more time here, folks. So we're seeing Apple now up, holding not aggressively up, but we're still seeing some really great growth from that end of it. Amazon's holding about down 4%. So it'll be neat to see what Amazon opens at tomorrow. See, now it's StockTwits was giving us the numbers here. So we can see that Amazon reported 0.80 cents worse than the analyst estimates. But again, I've never been a huge proponent of Amazon. I still think it's a great company, though, but maybe you guys know more about it than I do. And Apple's finally going to the moon. So it looks like the board is going to be completely lit up here. So yeah, fun, man. You guys should listen to the earnings call. Take it easy. I'm glad we've got through the earnings season without getting absolutely wrecked, because obviously if Apple missed, that would have been detrimental. It's nice to finally see Facebook get some life into it. Google coming back today. So this is a good day for the markets to figure out what's going on moving forward. And I'm glad that I didn't even get to finish my drink. But yeah, it's been fun, folks. I hope you enjoyed the 3-day event. QCOM, it looks like we've got NVIDIA. So the next big earnings will be, for me, NVIDIA. I'm going to be looking at the Canadian earnings. Shopify comes up at the beginning of May. That's one that I'm going to be paying close attention to. The market will die tomorrow looking forward. I guess depending on what guidance is, if there's lowered guidance, the markets could get wrecked. But like I said, I unloaded all of my money pretty much into the market today. So but again, nobody knows what the next day or week brings. I just feel like buying at these prices are probably not going to kill you. So I appreciate everybody shouting out in the group. Everyone that's part of the private chat group. Maybe tomorrow I'll mention how you guys can get involved in the private chat group moving forward. But yeah, it was fun. This has been fun, man. Hit the like button, you lazy bastards. That's what I'm saying, folks. We survived. I'm still, surviving here. We're not losing money like crazy. We're not overexposed to the ARK Innovation ETF. We didn't buy Teladoc. Things are good. Things are good. Unless you're Jeremy. If you're financial education, I don't know, maybe you were part of a bubble bursting, but I feel bad for him, because I'm down at most 5, maybe 6% on my entire portfolio. So I'm trying to survive in this very scary time. Stay cool, stay awesome, folks, and I will catch up with you tomorrow with a full portfolio overview. Peace.